Good afternoon, traders, and welcome to Phoenix Blues Daily Update. My name is Nishal Patel, and I'm going to be conducting today's update for you. First and foremost, let's have a look at the economic data that's coming out today, or well, just over an hour on Friday, the 15th of September 2017. The key data that we really should be looking for, and many of the traders are going to be looking for, are the retail sales figures, the monthly retail sales figures coming out at 1:30 p.m. That's local time here in London, BST. And another key area that we should be looking at is consumer sentiment, which is going to be released an hour and a half after the retail sales figures have been released. And why is that important? Well, for us as traders, what we need to acknowledge and understand are these key data figures, especially the data that we've seen or that have already come out earlier on in the week, CPI figures we had yesterday, and this data leads us to the conclusion whether or not a rate hike will be imminent from the Fed. And realistically, they're going to be looking at these figures. We have had inflation ticking up a little on the side of the States, so that's really going to be factoring into their understanding of when they should be having a rate hike, whether if they should or they should not. Now, with the data that's currently being released, it looks pretty much set on, and I think the markets are gearing up for a rate hike come December, so definitely potentially looking at a 25 basis point hike or a 0.25% hike in December. Something else we need to be aware of as traders, it hasn't had too much of a ripple as we've seen previously, but there has been a missile over from North Korea over Japan again. So this has been another test from North Korea. But as I said, we haven't really seen too much of a fallout onto the market. In fact, the market has been fairly intolerant, or I should say tolerant, to this missile test. Previously, we've seen the market have wild fluctuations and in some cases some huge moves to the safe havens, and we haven't had that at all over the course of this morning in the European Open, and well into wait for us to go into the US Open. We haven't had any of that fear factor, so that's something something that tells us that the market really is just looking at the figures coming out in the US, and I think that really is going to cause a spike. But let's turn our attention direct to the charts and let's see what's happened over the course of today so far. So first and foremost, let's start off on the dollar index. Just having a look at the dollar index on the daily time frame right now. Currently sitting at 91.47, so just below 91.50 on this daily time frame. We can see over the last couple of days, most certainly the dollar has fallen in value. We've seen a slight tick off, especially from what we had over the course of the Monday and the Wednesday, where we really saw the dollar started to climb. Tuesday was quite dormant for the dollar. It was quite a flat day across the markets, but Wednesday really the dollar started to appreciate in value, and we saw those bond yields tick up also. So, but over the course of this morning, we've definitely seen the fall, or the dollar fall on the wayside so far this morning. That may change a little later on this afternoon based on the data that comes out on the retail figures. Moving on forward, just having a look at how the euro has performed over the course of this morning, we can see that it really has appreciated. Right now floating at 1.1966. We've had some great intraday positions long on the euro, and it really is gaining momentum, bullish momentum over the course of this morning. Moving on to cable right now, and we can see how strong and powerful cable has been over the course of the last 2 days. In fact, just shy of a 500 pip swing over the course of the last 2 days. Obviously, we had key announcements on the side of the sterling, especially from the MPC yesterday, but on the side of the sterling over the course of this week, potentially looking like there is a rate hike on the cards on sterling, which is the first one for some time, and it could come as soon as November. Now, I think that's what we're seeing in the movement, and this huge swing we've seen over the last couple of days is the market factoring in the strong likelihood of a rate hike come November. So it's already being factored into the market. We can see the price of sterling rise. Of course, we said this off the middle of last week, in fact, when sterling was floating at 1.32 and broken 1.32. It will probably most likely be on the march all the way to 1.35. Right now floating at 1.3579, so potentially going into that 1.36 area, so looking very bullish indeed. Moving on forward to the Japanese yen, and we've seen the Japanese yen lose a little ground today. Right now the Japanese yen floating at 111.10 right now as it stands. Quite a large swing over the course of today. Obviously, we've seen investors not push directly into the yen, especially with that missile going over North Japan once again. As I said earlier, we haven't seen a direct flight to the safe havens, not as profound as we've seen previously, but definitely a push to the euro, and what we have seen is slight appreciation on the side of some of the bonds. Now moving on forward, just having a look at the Canadian dollar. Again, the Canadian dollar fairly flat on this daily time frame, having come off that high and the high of the week. If we just have a look on this daily time frame at 1.2243, so just below 122.50, right now floating at 1.2147, and then moving on to the Australian dollar, again having appreciated off the lows that we've seen over the early parts of yesterday. Right now floating above 0.880000, right now floating at 0.8020, so just above that key level. Right now sitting on that 382 fib and just propelled itself on this daily time frame. Final chart we're just going to have a quick look at is we're going to see gold spot on the daily time frame, and right now floating at 1324.30 per troy ounce. As we can see, that missile test hasn't caused a huge uptake or the price of gold to start surging in any shape or form. In fact, what we've seen is we've just seen it start coming towards close to the lower of the range for this week, so just above that 1300 area, $25 odd, just above that 1300 area. So guys, we've had a few trades already this morning. Euro has taken the lead role for many of our trades this morning. Had a few trades on cable as well, and most certainly there are going to be some great trades kicking up towards the early part of next week. The markets are really well are poised really nicely for us to make a good profit on. As always, if you'd like to benefit from any of our trading expertise, feel free to send us an email at info@phoenixblue.co.uk. Alternatively, feel free to visit our Telegram channel and join our Telegram channel, where we give away hints and tips on what can improve your trading and how it can be improved. And as always, by all means, follow us on our social media platforms, including Instagram and Facebook. Okay guys, until next week, happy trading. Bye bye.